Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies and their SOFI stock. We'll be projecting their future share price as well as going over their latest news updates. We'll start off by analyzing an article titled, "Down 64% in this bear market, can SoFi recover in 2023? So for more videos on SoFi Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies is essentially a digital bank, and their SoFi share price currently trades for $5.71, while professionals think at minimum this company is worth around $5, and at maximum the company is worth up to $10 from now until the end of 2023. As you probably already know, Sofi Technologies' SOFI stock is down by around 64% because of the recent bear market that we are in. The Sofi stock sell-off has affected them very negatively. However, when the stock initially went public, investor exuberance actually sent the stock price higher than what it should have been valued at, to where the stock price was well over $15 per share, which led to an extremely high valuation. That valuation has since subsided down past $11, which many people believe that the $11 price point is where the price should be because that was their initial price when they became public. But right now, many investors believe the company is trading at a discount because it's worth just below $6 as of right now. But with that being said, many investors are still worried about this company because of their large exposure to student loans, and with the extension of the student loan moratorium and the freeze on federal student loan payments, this has de-incentivized people with student loans to actually start paying back their loans or refinance their loans with a company such as SoFi. And SoFi made a lot of money from their student loan refinancing segment, which was a cash cow for this company. However, since then, SoFi has diversified their overall revenue streams and ultimately has just made this company stronger. In the end, the student loan moratorium will eventually subside and end, where people with student loans will eventually need to start paying back on their loans and hopefully refinance their loans with a company like Sofi Technologies. Now, although the SoFi share price has been falling very dramatically lately, it's very good to point out that a multitude of various fintechs, SPAC stocks, and the overall banking sector are all down right now, including technology stocks and just stocks in general. Specifically, let's focus on the banking sector, which is down around 23%. If we look at other institutions such as Bank of America and Capital One, we can see that the Bank of America stock is down around 31%, and shares of Capital One Financial are down around 36%. So clearly the share price falling in SoFi's case is not due to the company or business failing, but rather because investors are taking their money out of the market due to macroeconomic uncertainty. So if we put all of these factors together, we can see that there's nothing inherently wrong with SoFi as a company. So I would best describe this company as a risk to reward investment. If you can take on the risk of this company, then this company could give you a fantastic reward. If an even steeper recession leads to various people defaulting on their various debts, this is going to negatively impact banking companies, financial processing companies, credit card companies, and fintech companies. But I personally don't think the economy will reach that point, considering that the Federal Reserve is doing quite well getting inflation under control and keeping the economy from falling into a very negative recession. Now, there is clearly the risk that if we go into a steep recession, SoFi doesn't have a strong enough balance sheet to survive such a negative recession, so it could mean big losses and the company potentially going out of business. Now, I personally don't think that's going to happen because I don't think the macroeconomic environment is there quite yet, and even if we go into a deeper recession, I don't think it's going to be bad enough for Sofi Technologies in particular to actually go out of business. What I also like about the company is that if management successfully navigates the current macroeconomic environment in the short term, this company could be a massive winner further in the future. What I also like about this company is that even if the macroeconomic economy gets worse, Sofi Technologies targets young high earners that are extremely unlikely to default on their personal loans or any other loan products that Sofi gives them. On top of that, Sofi's underwriting policies are very strict, much much stricter than other banking institutions. So even if the economy gets worse, SoFi's overall customer base is extremely unlikely to default on their loans because SoFi takes on loans that are a lot less risky than other banks. And that's why I don't think SoFi Technologies will go out of business even if the economy gets worse. And I honestly don't think that the economy will reach that point, considering that the Federal Reserve is doing a fine job at keeping the economy above water, at least in the short term. So if this company survives the short term, this company could be a fantastic long-term winner. So then that begs the question, is this company a buying opportunity? Well, let's dive into this other article to see what this author thinks. The author says that if you're counting as an investor on a rapid recovery for SoFi Technologies' overall share price, don't hold your breath. SoFi stock is a buying opportunity according to him, but he says that you should only allocate a tiny position into this company and you should leave room to average down your average cost if things get worse. And this is the exact same type of mentality that I have. Even when I started to report on this company, I advocated for an initial 5% allocation or less to this company, which is why I only have a 4% allocation to this company, and I'm going to use that extra remaining 1% to average down my average cost basis if the company falls below $5 per share. I don't want to overexpose myself to this company because I want room in my portfolio to invest into other phenomenal companies that are performing quite well right now, or companies that I think I could buy at a very steep discount. There are so many other fantastic companies on the stock market. I don't want to over allocate myself to just one singular growth company, and also that would be improper risk management because then I would be taking on unnecessary risk of losses if anything were to happen to SoFi Technologies. So therefore, if investors are willing to patiently wait and refrain from investing too heavily into just a singular speculative growth stock, then this company could be a fantastic company for you to hold in your portfolio. But by all means, practice proper risk management and don't overexpose yourself to just one singular risky growth company. There are so many other great companies out there, and why wouldn't you want to invest into those as well? As of the start of 2023, we have seen some great buying activity regarding investors buying SoFi stock, so there's really no need to panic sell SoFi Technologies for any reason, especially if you already own shares. Now, if you are overexposed to this company, over a 5% initial allocation, you may want to liquidate some of your shares and invest into other stronger companies or ETFs such as VTI or VOO. Those ETFs are extremely strong and perform very well over the long term, and many very prominent investors like to invest into those ETFs during times of macroeconomic uncertainty, which we are in right now. However, in the meantime, there is no need to panic sell SoFi Technologies by any means. For those of you who do not have a 5% allocation to SoFi Technologies, feel free to do your own research or put this company on a watch list, but you should also leave room to average down your average price for this company over the long term, because if macroeconomic conditions get worse, we can see the share price fall further, and you would want room in your portfolio to average down your cost basis for this company so you can make more money over the long term once the price eventually rebounds, according to professionals. The author reiterates that you should not go overboard by buying too much SoFi Technologies because, like I said, that would be improper risk management, and there is a strong warning from a multitude of very prominent professionals, investors, and various CEOs of banks that have issued a strong warning about the financial sector during the year of 2023. Essentially, the financial sector may underperform the overall market in the year of 2023. However, I view this as a good buying opportunity because that means I get to buy financial sector stocks at an even cheaper valuation, so I can count on an eventual rebound. But if you are a short-term investor and you're not willing to stomach the volatility and the necessary risk of these types of financial sector stocks, such as SoFi Technologies falling in price in the short term, then maybe the strategy probably wouldn't be good for you. So this begs the question, is SoFi Technologies stock a buying opportunity or a selling opportunity? The author of this article says that SoFi stock is still a buying opportunity in his book. I, on the other hand, would give it a hold rating depending on what type of investor you are. However, just because the stock might be a good buying opportunity for him or a holding opportunity for me doesn't mean that it's going to be a buying or holding opportunity for you. You're going to have to manage your own risk, how exposed you are to this company, your age, and a plethora of other factors, including your overall investing strategy. Sofi Technologies is a great company to hold in a portfolio, but in the short term, macroeconomic factors may weigh the stock price down even further, and you should be prepared for that. But overall, I would say that this company fundamentally is very strong. We have even seen other companies try to buy out Sofi Technologies, but Sofi has not taken the bait of any of those offers yet, which means that the executives of this company understand that they have something very special here, and investors should treat their investment the same way. So I can't wait to see what Sofi Technologies can make of themselves in the future, but I would love to hear your thoughts down below. Also, don't forget to smash that like button, subscribe, and I will see you in the next YT video.